MCQ for process costing. Question number 1. Stages in production activities are divided into different segments. Each and every segments are called A, process, B, segment, stages, contract. What is the answer? Very good. It's called the process. In process, output of the one process is transferred to next process at a dash. Cost or profit or cost plus profit or market price. Only at the cost. In process costing, cost center is output or input or process or all of the above. Each and every process are called. In process costing, cost unit is output or input or process or all of the above. Output of the end process, saleable product. Okay. Which of the following statement is correct? Okay, correct statement. First one. One-to-one input-output quantity reconciliation is not possible with respect to process costing. Am I right or not? Yes. Output of the one process become input for the next process. Is it correct? Yes. Correct. Process may be carried out either sequentially or parallelly. Am I right or not? Yes, correct. Therefore, all the answers are correct. Understood? Yes, sir. Good. Output of the last process is transferred to dash account. Finished goods, costing pendle, cost of production. What is the answer? Finished goods account. Expected loss is greater than actual loss. Then normal loss, abnormal gain or process loss. Expected loss is more than actual loss. If actual loss less, edirbaartha loss more. Therefore, it's called abnormal gain. Understood or not? Yes, sir. Actual loss குறைச்சலா இருக்குடாங்கன்னா எதிர்பார்த்த லாஸ் கூட இருக்கு. அப்ப என்ன? Gain ஆயிருக்கு. Loss குறையுது. Right? Good. Loss in excess of predetermined loss. That is called abnormal loss. Careful பார்க்கணும். Okay? Loss in expected loss விட extra loss ஏற்பட்டிருக்கு. That is called over and above the normal loss is called abnormal loss. Okay? Then input quantity minus output quantity is equal to normal loss, abnormal gain or process loss? Process loss quantity. Good. Converting incompleted production unit into their equivalently completed units are called finished goods, equivalent unit, abnormal gain quantity, WIP. Called equivalent units. Understood? Next. Number of physical unit in process is 1000. Degree of completion 40%. Equal unit is formula for equal unit is number of physical unit into percentage of completion comes to 400 units. For kind info, short notes on equivalent production is a frequently asked question. First, you have to write the definition. It's accounting function for which converting incompleted production unit into the equivalently completed units are called equivalent production. Second point, it is for the purpose of better valuation of stock. It's for the purpose of valuation. Thereafter, you have to write the formula. Number of physical unit into percentage of completion. Thereafter, for example, in the same question, you can write as example. Then, steps to solve equivalent production. What are the first step? Input, output, quantity reconciliation. Second step, percentage of completion under equal unit of production. Third step, compute cost per unit of equivalent production. Next step, valuation you have to do for closing WIP, output transfer next process, abnormal loss or abnormal gain. Last one, process. Steps here, point. If you are going to write all the points, you will get full marks. Understood? Next. Degree of completion of the output transfer to next process is 100%. 100%. Output means should be 100%. Degree of completion for the normal loss is none of the above, not applicable. Okay, good. In general, degree of completion for the abnormal loss is very good, Kanna. 100%. Degree of completion for closing WIP Percentage as per question given in this question. Now comfortable with respect to MCQ or not? Very good, very good. So if you strong in MCQ, you can be in the position to manage the practical problem also. Am I right? இதுல ஒரு மார்க் தான், அதுல 14 மார்க் போயிடும் தப்பா போட்டேன்னா. Clear? Next. If the degree of completion of the unit scrapped is available, then percentage of completion of abnormal loss is 100% or percentage of completion unit scrapped, or 50 or 0. B, percentage of completion of unit scrapped you have to take. In general only degree of completion of abnormal loss 100%, but degree of completion for the unit scrapped given in this question means then that percentage only is supposed to take. Percentage of completion of opening WAP is not given, then we can solve the problem by only by way of weighted average method. Good. If the degree of completion for the opening WAP is given, then we can solve the problem by way of FIFO, weighted average, FIFO or weighted average. FIFO or weighted average. Suppose the question is, the degree of completion for the open WP is given in this question. It is better to solve the problem by way of FIFO method. But we can solve the problem by way of got the clarity or not? Very good, very good, very good. In FIFO method, for the purpose of computation of cost per unit, cost of opening WAP should be considered, should not be considered. Should not be considered for equivalent unit. Okay, cost per unit of the equivalent unit. Are you with me?
Yes, sir.
Good. This is adjustment with respect to FIFO method. Next, if output of one process is transferred to next process after adding profit, in general we are used to transfer only at a cost. Am I right? If after adding profit I'm going to transfer, then it is called inter-process profit method. Not equivalent production, not cost plus profit method. Okay, I'll repeat. In general, output of the one process is going to become input of the next process at the cost. Suppose after adding profit, if I'm going to transfer, then it is called one inter-process profit method. Are you with me? Good, good. In inter-process profit method, each and every process are not profit. Each and every process are what? Called one? Profit center. Okay. Then it's not a cost center, it's a profit center. In process costing, each and every process are cost center. Inter-process profit, every process is a profit because we are adding profit also. Degree of completion of abnormal gain is always, understood or not? Good, good. You saved your 6 months. Then the type of process loss that should not be allowed to affect the cost of good unit is correct. The type of, read the question.
Abnormal loss. Should not be allowed to. Abnormal loss.
Seasonal loss, abnormal loss, or abnormal gain. What?
Abnormal.
Because of the abnormal loss, can you please tell me, because of the abnormal loss, any impact will be there with respect to cost per unit? No. So, what is the answer? Because that won't affect the cost that we have to transfer to costing P&L account. Therefore, what is the answer? Abnormal loss. Next, 200 units were introduced in a process in which 20 units is the normal loss. If the actual output is 150, then no abnormal loss, no abnormal gain. Abnormal loss 30, abnormal gain 30.
Abnormal loss of 30.
We have given 200 input. Am I right? Out of 200, how much output we got it? 150 only output. Normal loss?
20.
Normal loss? 20 given in this question. Balance how much shortage? 30 is called over and above the normal loss. That is called the what? Abnormal loss. Answer C. Am I right?
Yes, sir.
Next. 100 units are proceed at the total cost of 160. Normal loss is 10%. Scrap units are sold at 25 paise. If the output is 8 unit, then the value of abnormal loss is what? என்ன பண்ணும்? In debit side, input is how much? Given input 100 units. How much the total cost of 100 unit? Total cost itself 120, not cost per unit, am I right? Total cost 100 units value comes to 160. Next, normal loss is how much?
10%.
Credit side normal loss 10% comes to 10 units. Salvage value 20 paise, am I right?
Yes, sir.
10 into 0.25 is equal to 2 rupees 50 paise, am I right or not?
Yes, sir.
2 rupees 50 paise is the normal loss. Then output is how much? 80. Therefore abnormal loss is how much? 100 minus 10 minus 8 is equal to 10 is the abnormal loss, am I right or not? Quantity is 10. What is the value they are asking? With respect to value, cost per unit formula you have to use, am I right? What is the formula for cost per unit? Gross cost minus normal loss salvage value divided by input quantity minus normal loss quantity. Clear? Input quantity minus normal loss quantity. Gross cost 160 is the gross cost, am I right? That's the one and only cost given, am I right? Minus normal loss salvage value 2.5. Then divided by input quantity 100, whereas normal loss quantity 10. Therefore denominator 90. So what is the answer, Kanna? What is the answer? 160 minus 2.5 divided by 90 is equal to 1.75 or 17.5. Check it up. 160 minus normal loss எவ்வளவு? 2.5 தானே? 2.5 each, am I right?
Yes, sir.
No, 0.25 each. 10 into 0.25 எவ்வளவுப்பா? 2.5 only, am I right? 160 minus 2.5 divided by 100 minus 10 எவ்வளவு வருது பாரு கரெக்ட்டா?
1.75.
1.75. So the answer should be what? Not 17.5.
1.75.
So maybe the 1.75 or 1.775. Am I right?
Yes, sir.
So what would the answer?
1.75.
Check பண்ணிக்கோங்க. Okay. Okay, maybe instead of that 17.5 இருக்குன்னு நினைக்கிறேன். Yeah, 1.75 is the correct answer. Okay, Barna. Next போலாமா? When average method is used in process costing, the opening inventory costs are subtracted from a new cost, added to the new cost, kept separately from the cost of new period, and averaged with the other cost to arrive in total cost.
Average with other cost to arrive.
Correct, Yosi?
If the separated cost of
Refer the procedure to solve the problem. In case of FIFO method, you are going to omit. In case of weighted average method, what to do? Add.
Yes, sir.
Add it to the cost, am I right or not? Then only average will come. Cost add பண்றோம்டாக்கன்னா divided by quantity போட்டா average கிடைக்கும். Understood?
Yes, sir.
So we have to add it to the new cost. New cost na current period cost and added opening stock cost you have to add. Are you with me?
Yes, sir.
Good. Next, spoilage that occur under inefficient operating condition and is ordinarily controllable is called normal or abnormal? Abnormal.
Abnormal.
Okay, inefficiency in operation. Okay, therefore what? Abnormal spoilage. The cost of normal process loss is absorbed by the good unit produced and amount realized by the sale of loss unit should be debited to process account. Debited to costing profit and loss account. Absorbed by good unit of produced. Debited to costing P&L account and the amount realized by the sale of loss unit should be credited to process account. What is the right answer?
Some units produced.
All of you? It should be
Option C.
option absorbed by the good unit is produced. Am I right or not? Normal loss, after subtracting normal loss salvage value, Remember the cost per unit formula. What is the cost per unit formula? Gross cost minus normal loss haulage value. That form part of good unit. So absorbed by the good unit produced. Are you with me? Next. Value of abnormal loss is equal to total cost of material, total process cost less realizable value of the normal loss, total process cost less cost of scrap, and total process cost less realizable value of the normal loss less value of transferred output. Transferred output. So value of the abnormal loss. Abnormal loss you have to value based on what? Abnormal loss. You prepare the remember the process costing. Okay. Whether output transfer to next process or abnormal loss, you have to value based on what? Cost per unit only. Therefore, what is the answer? The total cost less realizable value of the normal loss less value of transferred goods. Am I right? Therefore, what is the option? D is the option. Are you with me or not? It's purely based on process costing only. Okay. Inter-process profit is calculated based on a process. A process is the cost center. Each process has to report file. The efficiency of the process is measured. The wages of employee is linked to the process profitability. No. It's for the purpose of what? Efficiency of the process is measured for the purpose of measuring the efficiency. Therefore, answer. Next. Under weighted average method, what is correct? You have to identify. Am I right? Now, first one, the cost to compute the opening WAP is ignored. Is it right? We have to consider. Second one, the cost to compute the opening WAP and other completed units are calculated separately. Is it correct? No. See, the cost of opening WAP in process and the cost of the current period are aggregated, and the aggregated cost is divided by input in terms of completed unit. Is it right or not? Yes. Closing stock of WAP is valued at the current cost. What is the right answer? C is the correct answer. Good. A process account is debited by abnormal gain. The value is determined as equal to the value of normal loss or cost of the good unit less realizable value of the normal loss, cost of the good unit less realizable value of the actual loss equal to the value of total units less closing stock. Cost of goods sold, cost of good unit less realizable value of normal loss. Option B upon. Not actual loss. Normal loss only you have to adjust. Are you with me?
Yes, sir.
Gross cost minus normal loss. Normal loss only you are adjusting. Understood? Then Lean Lab developed 55 mm film using the 4-step process that moves progressively through four departments. The company is specialized in overnight service and has the largest drugstore chain as its primary customer. Currently, direct labor, direct material, and overheads are accumulated by department. The cost accumulation system that bit describe the system Lean Lab is using. Operating costing, activity based costing, job or process. It's 4 process is there, therefore comes under what? Process costing only. Who has created, we have to verify. Next, shall I go to the next one? When compared with the normal spoilage, when compared with the normal spoilage, abnormal spoilage. So we have to identify which one is for abnormal spoilage. Are you with me? First one, arise more frequently from factors that are inherent in the manufacturing process. Is it right? Abnormal loss would not happen frequently. Am I right? So first statement is not correct. Second one is given that the same accounting treatment as normal spoilage. Is it right? No. Separate treatment. Okay. In generally thought to be more controllable by purchase department than production department. That is also not correct. Am I right? Loss will happen in the process only. And last one is not typically influenced by tightness of production standard. Am I right or not? Therefore, what could the answer? Yes. D is the correct answer. Next. Sum based question. Assume 550 units were worked on during the period in which the total 500 units were completed. Am I right? So input is 550. Am I right? Output is 500. Normal spoilage consists of 30 units. Abnormal spoilage is 20. 500 plus 30 plus 20 is equal to 550. Tally them. The total process cost were 2,200. Okay, total cost. The company accounts for abnormal spoilage separately on the income statement as loss due to abnormal spoilage. Normal spoilage is not accounted separately. What is the cost of goods sold produced? Cost of good unit produced. Find the cost of good unit produced. How to identify? You can prepare the tabular method. Input output only. Am I right? Input 550 units. Cost of the input
2,200.
550 value 2,000. Total value comes to 2,200. Yeah.
Yes, sir.
The unit and the value. Then output transferred comes to
500.
500 is the output. Normal loss
30 units.
30. Abnormal loss 20. What else they are asking? That's all.
Yes, sir.
We have to identify cost value of the product. How to value? Gross cost how much? 2,200 minus normal loss salvage if any, nothing is there. Am I right?
Yes, sir.
0. Total by input quantity 5,000. Sorry, 550 again. Input quantity is 550 minus normal loss quantity 30. Therefore, how much the cost per unit gonna? How much the cost per unit? 2,200 minus 520. 4.23. They ask total value of the unit produced. How many units you produced? So 500 into 4.23 is equal to how much?
2,115.
Answer B is correct. Am I right? 2,115. Are you able to follow or not? Small process open for all of them. Am I right? Manageable? Good. Next. IEC Limited uses process costing system and inspect its goods post manufacturing. Engineering and an engineer notice on 31st March as follows. Good unit completed all over 15,000. Output is 15,000. Am I right? Normal loss 300, abnormal loss 100. Unit cost were material 2.5, conversion cost, labor and overhead comes to 6 rupees. The number of unit that
Question of observation.
okay, not it. Okay, unit scrap. Material cost 2 rupees 50 paise. Conversion cost 6 rupees per unit. Material cost all over 2.5, 2 rupees 50 paise. Conversion cost is 6 rupees. The number of unit the company transferred to the finished goods stock and the related cost to unit were. Okay. The requirement of the question, how much the value of the product? Am I right? So I'll repeat. Output is 15,000 quantity. Normal loss 300. Abnormal loss 100, everything in units. With respect to cost, they are given material cost per unit is 2 rupee 50 paise. Labor and overhead together comes to 6 rupees. That's all. Understand? So we have to find out how much what is the value. So value comes to how much? 6 rupees plus 2.5 is equal to how much? 8.5. 8.5 into 15,000 is equal to how much? So 1,27,500 is the correct answer. Option A. Are you able to follow?
Yes, sir.
Because there is no input quantity given. Am I right?
Yes, sir.
There is no input quantity. Am I right? Normal loss value also not given. Am I right or not? Therefore, gross cost minus normal loss salvage value to be input quantity minus normal loss quantity is not possible. Am I right?
Yes, sir.
Available info per unit cost, material plus labor plus overhead into number of unit transfer per unit is equal to total value you can get. So 15,000 quantity they are going to transfer, that is given in this question. Cost per unit 8 rupees 50 paise, 6 plus 2.5. Therefore, total value of the product 1,27,500. Understood?
Yes, sir.
Process cost easier, manageable. Good.